Alright, what's good y'all? So today in this video I'm going to show you guys how to mark out or how to find the daily bias and how to use it to your advantage, whether it's just on the daily time frame or just in general. So in this case today is it's June it's June 16th, the Monday, and we just had a new candle opening because market just closed. But what I like to do first to find the bias is, or just the target of the day, is I like to mark out the previous daily highs and lows. So in this case, like I said, today is a Monday. I like to mark out highs and lows, and the previous day was Friday the 13th. And then we just mark it out, draw it with this black line, and then from there I'm gonna copy and paste, and then put this as our previous daily low. Alright, what I like to do next when market opens or before market opens is I like to mark out any prominent highs or lows. Alright, so this would be considered a prominent high. This would be considered a prominent high. So what a prominent high is, just any recognizable or like important high or low that you see. I see this as a low, so I'm just gonna mark it down. I see this as a low. Now this is quite far, but honestly, you know, this is a far stretch. So these are just examples anyway, so it doesn't really matter. But you can mark out as many as you want. Most of the time, the further you go, they might not hit, but you can just mark it out just for the examples. And then yeah, so this is pretty much what we have. All right. Now I'm gonna draw out the market open at 6:30. Now I do trade on the PST, so it's Pacific Standard Time or whatever. Alright, now we are just gonna go on the 15 or 30 minute, and I'm gonna show you an indicator that I also use, which is the session highs and lows. And I think a lot of people should use this because when it comes to trading, you're either gonna hit a previous daily high or low, a prominent high or low, a session high or low, which is the London high, London low, Asia high, or Asia low. Most of the time, you are gonna hit something. All right. Now, this is how you determine the bias. All right. When you're close to it, when you see price wanting to go in an uptrend or downtrend, then most of the time you are gonna want to tap into that before continuing upwards or continuing downwards or reversing the trend or whatever. All right. Now, in this case, or in this example, all right, market opened here. Alright, we're not looking at what happened after market open, we're looking at what previously happened during the market open. Now in this case, what do you guys see? Like, yes, I can mark out some like fair value gaps on the hourly or the 4 hour or the daily that we might see, but overall, what is price telling us? What is it wanting to go towards? Alright, I'm gonna just draw it out just to simplify it more, but price is looking to head up in an uptrend right now, right? We've headed up all the way up here. We have yet to tap into this prominent high. Alright, now this is pre-market again. We have yet to have market open, so don't think about anything after just yet. But overall, the bias is pretty bullish, alright? We're not really seeing any rejection just yet. We did have this candle close below here, but um, we did tap into this 30-minute fair value gap, and then we just came back up. But I think that was market open, okay, or just before, a little bit before market open. But overall, bias is bullish. And what would our targets be? All right, our target would be this, our prominent high. So this would be our first target. Our second target would probably be this previous daily high, and then our third target would probably be this prominent high if we do see price continuing upwards. All right. Now, as for the session highs or lows, you don't really see anything. There's not really much we can gather as for the information because we already swept London highs. And usually, when you do sweep London highs and you continue upwards, that remains bullish, right? Because if you sweep something, or if you sweep a high, and then you don't really show like a bearish reaction, obviously what is price wanting to do? It's wanting to continue upwards. It's pretty simple, right? But if it did show some kind of bearish reaction, then we could have technically, switched our bias and made it, I don't know, bearish potentially. But in this case, you can see we're just continuing upwards, bullish, right? um all right, so now that I marked out all the targets, what we want to do is we want to scale down lower. All right, 15-minute. We have yet to see much. Let's just scale all the way down to the 1 minute and see how market reacted. All right. So when market opened, or yeah, market opened, we closed above here, and you really couldn't have taken a trade unless you were on pre-market. But I don't like to trade during pre-market, so I stay off that. So let me just see. I don't know. You could have probably entered here while this candle is still moving, or it has yet to close because it's just bullish and it's looking to target this high. So you could have taken a trade here, but this would have been in my opinion, a low quality setup. So I like to wait it out. Now, once we tapped into our first target, which was the first prominent high, what can we do to see whether we are wanting to continue upwards or wanting to continue lower, or just reverse, right? We're looking at the 1 minute candle in this case. Now you can obviously look at the 5 minute, you can look at the 15 minute, but in this case, I'm just gonna look at the 1 minute just to make it easier for myself because this is what I was looking at. All right. So 1 minute, we created a 1 minute bullish fair value gap here and down here. Now I'm not gonna mark out this bearish or this BPR because we never tapped into it, so it's kind of useless. But in this case, I'm just gonna mark out these, which we did validate. Alright, so once we tapped into the prominent high, we kind of reversed, which is all good because usually people are taking profits here. And then we could see whether if price wants to continue lower, which it never did, and it just kept on validating this bullish fair value gap. We then just continue upwards a bit and then just consolidate, and then right at 646, after this candle closes, we create a bearish fair value gap here. Alright, now we created a bearish fair value gap. What does this mean? Are we bearish just yet? No, we are not, because we just created a bearish fair value gap. I mean, you cannot be entering, especially on the 1 minute, we cannot be entering off this confluence. Alright, what do we see after now? I'll give you guys a couple seconds. A couple seconds is over. Is that we tapped into this bullish fair value gap again. Now, in my opinion, somebody could say this as a low time frame liquidity sweep. I don't really like using that, or I don't know, maybe it was an S&T or whatever, but this could have been a low time frame liquidity sweep if you had, like, I don't know, maybe this, if you were using the seconds chart, maybe, meaning like the 30 seconds. But bro, that is already, that is like, dude, that is like, I don't know, I don't use the 30 seconds chart, but some people do. Alright, so we have yet to kind of wanting, we have, okay, sorry, we have yet to decide whether we want to keep on going bearish or bullish, because we tapped into this bullish fair value gap. Notice we have not closed below it, and we closed above it, so technically this is still valid. Alright, so once we closed at this candle, we just like skyrocketed it all the way up and closed above this bearish fair value gap, creating a inverse. On top of that, we created a new fair value gap, which is now bullish. Alright, So in this case, we've just added two confluences. All right, actually three confluences. All right, we have this, and then this, and we validated this, which means price is probably wanting to go higher. So in this case, you could have taken a trade off this. Now, is it risky? A little bit, but overall, you're seeing price wanting to target um, the second target, which is the prominent high. So once we close, Jesus, once we close below here, this would have been your entry, and then from there you could just have this as your break even. This is what I would do. I would just have this as my break even. All right, because this is not my target. I mean, if price decides to come back down, okay, you probably would have gotten stopped out at break even, but I mean, it's just break even. You're not really, you know, this is just a target that price is wanting to go towards, and it could potentially go higher. But overall, this is the second target, like I said. So once we tapped into the second target, which was the previous daily high, we want to see how price is going to react. And we created a 1 minute fair value gap again. We never really get any validation to it, but creating a 1 minute fair value gap means that it's still bullish, right? And we're just waiting on what price wants to do. Now we did create a bearish fair value gap right over here, so I can fucking draw it. And right then we inversed it. And then so overall, my bias is still pretty strong, and you could obviously take, your profits all the way up here if you're really confident, as we're seeing all these confluences just adding up. Holy, I gotta sneeze. But anyways, so in this case, this is how you find your bias. You just add confluences like this, and you mark out all these prominent highs and lows, these session highs and lows, because most of the time price is wanting to tap into one of them, like at least one of them each session. So if you add everything all together, we didn't really get anything above the 5 minute as for our confluence. Most of the things we saw today was just on the 1 minute, but overall, we were just leading towards these highs, if not this high, because once we tapped into this high, there's nothing bearish. We're not getting anything bearish, so why would we continue to look for a short? All right, unless you shorted here, but still, I mean, like we have a fair value gap here. We literally just created a bearish fair value gap. That's all, nothing else. All right, and we didn't even validate this, so there's no way in hell somebody should be taking a trade off this, just this. All right, so in this case, this was just an easy day to find a short. I mean, not a short, a long, and then boom, you would have won. And just like that, that's pretty easy. I mean, like what? And from here, you can see once we tapped into this high, do we want to still be bullish or do we still want to be bearish? Looking at price, it was kind of consolidating. It was giving us still bearishness, bullishness. But overall, I mean, look, we had a bearish candle, or we don't really get okay, we get an inverse here. Do we validate the inverse? You just okay, we validate it, but I mean, there's still so many fair value gaps. There's so many bullish fair value gaps here. And then we're also validating these. So you really want to look at the bigger picture. In this case, I feel like I would be more comfortable. We created a bullish fair value gap here. We then inversed it, creating a BPR here. I think I would enter a trade off here instead of down there, because there's nothing here as for the fair value gaps. Maybe there's there's a fair value gap here, but then like I said, we inverse this from this candle, and then I can't really see any bullish fair value gap here. So any trade within this, whether probably here, I would be looking to take a trade, and I would be targeting a prominent low. So in this case, what would be a prominent low? I mean, since we went up so much, I would think like a prominent low would probably be like here. Be the here. Because, I mean, unless I want to target all the way down here, which I highly doubt that's going to happen, but I can still mark it out. Most of the time, when it comes from a uptrend, or the bias is an uptrend, we don't really get that crazy of a reaction to the downside again, or vice versa. So overall, I think I would have just had taken that like 1-to-1. It was like a perfect 1-to-1. Honestly, so this would be a trade you could have taken. And yes, it was choppy, but overall, I mean, you're trading what after the volatility of a Monday, and Mondays are usually not volatile, so yeah. But yeah, if you learned anything, make sure to like or subscribe from this video, and I'll probably make more in the future. But thanks for watching.